Well, hello. Good afternoon to everyone. Welcome to the Solid Report. It is Thursday, February 19. And you know what? To be honest, I feel like the markets are just chopping around a little bit. We're a little bit down in the Qs today, but arguably nothing is like down very dramatically. Not that massive stuff. We still have another hour until the market closes. So we will see as we continue to do the show. How is everyone doing today? I mean, it's been a pretty hideous last couple of weeks. We did have a little bit of a bounce from a couple of weeks ago, but you know what? I'm not sure. I know it's the title of the stream, right? Are the markets ready to fall off a cliff or about to fall off a cliff? I mean, we'll see. Everyone knows that there's going to be the attack in Iran coming up soon. We've already seen a lot of military preparation for it. It's really just a matter of time. And one thing is that the Olympics is happening still, so we'll see if it happens after that. I don't know. There's lots of theories around it. I prefer not to really dwell on that, but just wait until and see the hand that the market is going to present. But we're clearly having a little bit of weakness today, not in the broad markets. However, if we do look on some of the other sectors in the market, not everything is necessarily falling off a cliff. So let us jump right into the charts and darts segment. As I already said, my bid for the first part of the stream, will the U.S. launch an attack? Yes, they most likely will. There's a lot of military convention going on over there. Also, if I bring up these charts over here, charts and darts. Oh, wow. I'm supposed to be doing a Lutnick segment right now, but let's just bring it up real quick since we're already on this topic, and then we'll go more into the charts later on. So I don't know if anyone noticed, by the way, Herbalife did get a stake of about 10% from Cristiano Ronaldo, of course, the famous all-star soccer player. And yeah, he bought stake in the company. And you know what? Kudos to some people that are calling out this one, because I know there are a few people on Twitter who are calling out this one as a potential play. And I mean, my goodness, it is up 19% today. I don't really know about this company long term or anything, but like, look at this. Certainly someone else know. And I know Jay Boltard was talking about some like $17 million flow in options coming yesterday, or like $1.7 million in options flow coming yesterday before the close. And like, look what happens. Like, someone always knows. Someone always knows what's going to happen in the stock market, and usually we do. So as we we're discussing in the war, if you look at a lot of these defensive companies, like they've been ripping up ever since. Oh yeah, we talked about this on the stream last time over here. So you had Trump basically say that he's not going to let all of these defensive companies do buybacks and dividends anymore, and then Lockheed Martin dropped like 8%. And since then, it's been on a breakneck rally. Like, this thing is up like 34% for Lockheed Martin since it basically bottomed out after Trump said he's going to be increasing the budget to $1.5 trillion, which likely it's not going to go to $1.5 trillion. But still, that's a dramatic move for Lockheed Martin. This is not a small company. This is a $152 billion company. So a 30% move down from here, we'll put it at about $120 billion added capital to this company, just from what Trump was talking about. Wait, hold on a second here. I am not the COO of Wolf. Man, what is going on here, guys? Come on. I'm not the CEO of Wolf. That is Gav Blacksburg, of course. So let me just put on my handle over here. Just a reminder, guys, I did change my handle on X. It is Sam_Badawi. So if you're going to be tagging me and stuff, make sure you do that. I mean, it's obviously going to autocorrect you, so it won't even matter. But we will see. What do you think of RVI, Robinhood's new IPO and private equities? I don't know. It's excellent liquidity, if anything. I wouldn't tamper with that. I usually don't tamper with IPOs as soon as they happen. I made that mistake with Klarna. Lost about 15% in that position and got out just in time before it made its massive plunge. In fact, today, Klarna is it's like in the teens, man. Like, this is insane. Klarna is literally pricing as if it's going out of business. They're down about 26% today. We're going to take a look at that earnings sell-off. I believe they did report earnings this morning. Sam is the CEO of yeah. Oh, my bad. You know, you're right. Actually, it did say Sam, but I was Sam, but it did say CEO of Wolf. So I think they forgot to change it. I don't know what's going on here. Anyways, Vista Shares guy, yo, what's going on, Vista Shares? How you guys doing, man? You guys are killing it with your ETF. AIS is Vista Shares Artificial Intelligence Super Cycle ETF. This thing has just been straight up from here. And a large portion of the portfolio that they do have in this ETF, a large portion of this ETF actually is in Micron, SK Hynix, and Samsung. Like, they've caught the entire move. So kudos to Vista Shares And kudos to Mike Shammer, who is the Vista Shares Director of Marketing. Man, you guys are awesome. You guys are a great crowd to hang out with. Anyways, guys, let's get into the next part of this segment. So there have already been a lot of talks about you have these politicians who are able to buy stocks and so on. And maybe sometimes they make a good move, maybe not. I mean, that's more of the Nancy Pelosi trade where she's able to buy these stocks before they make their massive move. We did get some notification here that, hold on a second here. I'm going to bring up the Chrome tab. Oh, I didn't even bring up the Chrome tab right there. Hold on. Let me just click on it right here. Oops. Why isn't this thing opening? There we go. All right. So right here, I shared this post this morning. And we have here, let me just make that bigger for you guys and share this tab. That Howard Lutnick made a few moves this last quarter. Now, he's probably not the one managing this portfolio. He probably has a say in terms of what to buy. But overall, I believe Cantor Fitzgerald is the one that manages the portfolio, which is a large sell-side firm analyst, also manages portfolios. And a couple of things that I noticed on here. One, I don't know what company this is. He bought the company Taco. Now, wait, hold on. What is the company Taco ticker? Let's take a look at this. Birdo Acquisition Corp. So Birdo Acquisition Corp is, how is that performing on the charts right now? Birdo Acquisition Corp. Is that funny that he bought the stock Taco? Oh, why is he buying this? You know what? He must have partial ownership in this company. Howard Lutnick, Taco Birdo Acquisition Corp. I'm going to share this screen. I'm like doing live DD for you guys. Live DD over here. I want to know what the deal it is with Howard Lutnick. SEC charges Trump's commerce pick. Cantor Fitzgerald, chairman and CEO. Whoa! I guess I didn't know that. He's a CEO and chairman of Cantor Fitzgerald? No way! That you learn something new every day. Is he still? He's still not it, right? Okay, so it's now Christian Wall, who's now the CEO there. So I guess he's part of the M&A crew. I looked it up on a different screen. And apparently he got charged by the SEC for it. He bought a Bitcoin company. All right, so he clearly has some leg in this business, so he wants the stock to go up. So maybe he knows something we don't know, whatever it is. Yeah, dude, I mean, we're big fans of you over here, Wolf. So, kudos to you guys at Vista Shares. But anyways, let me share this screen to get to the crux of this business right here. So he bought IREN, right? And it's 2% of their portfolio. Now, that is the 9th largest holding in their portfolio. And he basically added all of it. I believe he added all of it. Actually, no, he had a very small position in IREN, 6 basis points, and he increased it to 2% of his portfolio, 1.99%, added $3.3 million in shares, and now he owns about $1.2 million. He doesn't own 1.2% of the company now, does he? That doesn't make any sense. IREN is not a small company anymore to own that much. Oh, maybe he does. IREN is a $4.2 billion company, and yeah, apparently he owns 1.22% of IREN. Very interesting. BMNR, he added BMNR, not a sizable position. So it was previously 35 basis points. Now it's 58 basis points. He added over 700,000 shares. So we'll see what happens with BMNR. I don't know. Maybe he bottom ticked it, whatever it was. But according to this chart, his average buy-in was about $27. So he is now underwater in that BMNR position. So we will see what happens with that one. He already has, actually, no, he added to his HIMS position. He basically doubled it. Still probably a small part of his portfolio, which doesn't really make a move on how much he owns in the company. And also he bought Poll, he bought more Oracle. Oh, wow. That's actually a lot of Oracle that he added to his portfolio. Pretty decent size. Ondas, he added an Ondas position, very small size for him, 5 basis points, added 300,000 shares. And Big Bear AI, I mean, he's obviously a long AI over here. And Intel, I mean, he probably was told that he should buy some just to make it look a lot better. But yeah, I mean, for the most part, he is definitely long AI, and there really is no reason to sell AI and be scared that the market's going to fall off a cliff. Now, I know that's a title, maybe a little bit of clickbait, but you know what? To be honest, I don't see any reason for the market to fall off a cliff right now. The market is still bullish. We'll go over that in the charts and darts section. The next thing I want to talk about is the Meta and Nvidia partnership. Yes, so Meta and Nvidia created a partnership. We saw the news about it a couple of days ago, so I'm not late on that. But the thing is that if Meta was largely an owner of a lot of chips from AMD, and also this partnership is also going to equate to adding more NVIDIA networking, specifically with their NVLink. So Meta is already a customer of Arista Networks, which is mostly networking, and they're already a customer of AMD. So if you add NVIDIA to that belt, and Meta obviously is building a large amount of infrastructure, what does that mean for those two other companies? So we're going to go check out Daniel Newman. There's a clip on Fox Business with Daniel Newman where he's discussing the impacts of this business to ANET as well as AMD. And let's go ahead and listen to his thoughts.
Expanded their partnership. NVIDIA's AI chips power Meta's hyperscale data centers. Does this put Meta in an AI leadership position?
Hey, good morning, Stuart. Good to be with you again. Meta is all in. I mean, 115 to 135 billion in capex. And remember last week when I was sitting next to you, I told you Nvidia is the biggest beneficiary. You're talking about millions of chips was the number thrown out. And think about it this way: a million or so of these racks is our estimate, back to the napkin, $48 or so billion. Now that's almost as much revenue as Nvidia did last quarter. So when you start to see the numbers swelling here, you start to realize that Nvidia sits in a really good position here. And Meta, of course, is investing big because it needs to have the leading technology so that it can continue to win those 3+ billion eyeballs that use its platform every month. So it's a great partnership. It doubles down on this CapEx story. And Meta is one of those companies that's turning AI into revenue right now.
Well, why is Nvidia the core of Meta's mission?
Well, NVIDIA is the leader right now in all these technologies. And you've heard a lot of these zero-sum stories, like, for instance, that Meta is going to build its own AI chip and therefore NVIDIA is going to get taken out. And that's not at all how it works. With the constraints and the desire that these Mag 7 and these other AI leaders have to build the future, they're taking all of the accessible compute that they can get their hands on. NVIDIA has the most capacity. It has the most ability to build these systems quickly. It has TSMC. It has the memory, which we also know is constrained at their disposal. So being aligned to NVIDIA right now is the keys to the kingdom. And their desires to build their own, Stuart, it's great. And over time, they will do that as well. But the zero-sum thinking is problematic. But this is just more proof that this CapEx boom and this AI boom is a very real trend, even if the market is digesting for a period of time, maybe even into the second half of the year.
Real fast, AMD is currently down. You're calling that an overreaction?
Yeah, I mean, this is exactly what I was just saying. You know, AMD has a partnership with Meta as well. Now that NVIDIA is coming in, everyone's saying, oh, NVIDIA's in, AMD's out. And we believe sincerely, Stuart, that AMD is still in. NVIDIA, of course, has that biggest metric, going to continue to sell the most volume. But AMD, at a $5 to $10 billion a year run rate right now of AI chips, they still have a ton of upside. And these hyperscalers are going to use AMD just for the sake of diversity and the compute capacity they need.
All right, Daniel, you still like NVIDIA, clearly. Daniel Newman, thanks for joining us. See you again real soon.
Yeah, so I agree with them. I don't think this is necessarily bearish for AMD. Obviously, there is a little bit of competition here. I think competition is totally healthy whenever it comes to this entire sector. Yes, NVIDIA is going to lose market share to a lot of companies. I don't think it's going to be a dramatic amount of market share, but it's going to be market share to other companies that are building ASIC chips like Broadcom, patents that are going to be given out and licensed to be given out from ARM Technologies. Or sorry, not ARM Technologies. I forgot the name of the ARM, the last part of the ARM company. Marvell Technologies is designing chips, or we don't know if they're designing the new chips for Amazon. We'll continue to see that progress. But overall, I don't think this is necessarily a bearish picture for AMD. And the reaction to it might have been a little bit overdone. I do agree with him on that one. I personally am not long AMD, but since then, we have bounced a little bit. I remember that was trading after that news was released. Yeah, it went like as low as like $194. Obviously, it bottomed earlier in February, but it went as low as $194, and it has recovered a little bit amount since then, probably because the market kind of took a deep breath, was like, hold on a second, maybe this isn't as bad as we perceive. Now, Arista Network, on the other hand, probably is going to be, I don't want to say hit too hard from this one, but they did just have their earnings last quarter, and amazing earnings. I already went over that with you guys, triple beat across the board. But the stock is trading quite a bit lower. Well, not quite a bit lower, but I think it's about 10% lower from where it was after that earnings beat. In fact, after hours over here, it was all the way at $162. So where is this thing trading right now? So since that peak, it's down about 16%. And then we did get the news the other day. I think it was Tuesday. Yeah, so it's about 5% from there. So basically, AMD is up since that news release, and Arista Network is down. One thing we need to remember is Arista Network is really with networking, right? They build the networking equipment for these racks to connect all these GPU clusters and servers. And Nvidia has the NVLink 52, right? So the NVLink 52 connects all the GPU clusters for the latest Grace Blackwell line. But on top of that, they're going to be releasing new networking to basically bring not only their chips together, but also the GPU clusters from other servers as well and other vendor providers. That was the whole point of NVLink Fusion, to be able to basically daisy chain a bunch of GPUs, not just from NVIDIA's ecosystem, but share the ecosystem with other companies as well. And this might not be so great for Arista Network. Now, Arista Network is certainly not a cheap stock anymore as much as it used to. I mean, it's a $170 billion company right now. And on the on the Seeking Alpha, what's Arista Network trading at? Now, I remember when this thing was like 90, 80 bucks. That was a good time to buy Arista Network. I did do a little bit of a trade in that. But since then, yeah, it's trading at a forward PE of 42, which is considerably more expensive than NVIDIA. Its growth is pretty decent, 28% growth. Its profitability is very profitable. It's got a 64% gross margin, 42% EBITDA margin, and net income margin of 40%. So, you know, it is a profitable company, but arguably the thing has ran pretty far. It got pretty extended, and that's likely why you saw a little bit of a pullback since then. AMD, on the other hand, is not nearly as expensive as Arista Network. If I look at AMD over here on the Seeking Alpha, let me bring that up over here. If I look at AMD, its valuation isn't as demanding. Well, actually, a 44 PE is still pretty demanding, but AMD is growing at about 34%, and their profitability on a gross margin perspective is not as high, but 52% gross margin is good. EBITDA margin is not as high as Arista Network, and neither is net income margin. But you're not buying this company for their margins that they have today. You're buying for their margins that are going to expand in the future, as well as their growth and profitability, because they are part of this AI theme. They are part of a lot of companies that are continuing to buy chips hand over fist. Yes, they might have lost a little bit of game from Nvidia, but from Meta, but Meta will still continue to do business with AMD. So that is my thoughts on that. Could I check Applied Digital? I mean, this is really falling in the whole basket of Nebius, IREN, and all those companies. So they're all going to move in unison together. Obviously, if I bring it up with other charts over here, let's see over here, and then I'll go down to my data center sector. Oh, okay, so yeah, Nebius is up about 4.5% today, up pretty considerably since their earnings, and it's saying do it pretty well. But you know, we're getting to that territory again where Nebius is getting quite extended and usually does like these whiplashes, right? It doesn't always go straight up. Now, it doesn't mean it has to come back down here. I'm just saying that, you know, chasing this move after it's made this insane move from its bottom earlier this month, would be pretty, risk reward would be pretty low in order to do that. So you'd be risking a lot. Obviously, if you're investing for the long term, it's not nearly as important. But I mean, this thing was like $75 a few weeks ago. So what makes it any better now other than the earnings that we just had? In fact, the earnings probably opened up some stuff about the capex from $16 to $20 billion in capex for just this year alone, which is wholly expected. But at the same time, I mean, the story really hasn't changed. $79 billion of ARR for ending the year, and that's an annualized run rate. So that's not necessarily how much you're going to earn at the end of the year. It is just how much they have at the end of the year when you take the monthly ARR or the monthly revenue, multiply it by 12 and you annualize it. Am I still in ACLS? Yeah, I discussed this yesterday. I am still in ACLS. Obviously, it was not the best quarter ever. In fact, the quarter was pretty bad because they did reduce their guidance. And you'd really expect if they are part of the memory tailwind that they will continue to have their guidance. Still looking a bit into this, but if I look at the chart over here, we do need to hold this 200-day moving average, okay? Because this is the line in the sand for me. If it closes, I would say tomorrow below the 200-day moving average and it continues to show that it's losing support, I'm likely going to exit the position and look at another one later. Sometimes you don't get things right all the time. Sometimes you do. Publicly, obviously, I got this one wrong coming into earnings, but that is a reason why we position size correctly. So if you were very heavily sizing this with call options before the earnings, you probably are not voting pretty well. I would never advise the size pretty heavily in options unless you're willing to take on that risk. I did have the $90 calls in this for March. Those are obviously bleeding along right now, but it is what it is. What can you do, right? So I still have the shares. So the shares, my entry was like $89, $90. So I'm down about maybe 15, 12% from the entry of the shares. The options are down about like 30, 40%, pretty nasty, but it is what it is. That's just part of the game, right? So you just have to play your odds there and win more when you win and lose less when you lose, right? So that's just the name of the game. Applied Digital, I haven't really looked too much into this one, but they did have a great quarter over here. If I look at the chart over here, since we're on the charts and darts segment, and we are in the charts and darts segment. Okay, so if I look at this one over here, Applied Digital is trying to find support here in the 100-day moving average, right? If it breaks this, it's likely going to go to $21, not all at once, you know, but that will be the next target if it does break it. Now, but these targets don't have to happen, but if you look at these charts, there's a reason why the charts have simple moving averages, exponential moving averages, because a lot of hedge funds and fund managers are looking at these charts, looking at these same indicators. So you need to really work around what they're kind of doing to give yourself the best buying opportunity here. And they do tend to respect these levels. Like, look at this 100-day moving average. It's like respecting the 100-day moving average, right? And then look over here. For a while, it was respecting the 90 EMA and the 20-day moving average on the daily, right? And then it's basically consolidating right now. It looks like it's more consolidating than anything. But it is finding support here on the 100-day moving average. Look what happens every time. Now, that doesn't mean it's going to happen for sure. Because if you look at the relative performance compared to the other data center stocks, well, Nebius is doing just fine. It's above the 100-day moving average. It's actually very bullish. And everything's starting to curl up again, right? IREN, maybe not so much. I did exit that position. Not looking to get back in right now. CoreWeave, things are starting to curl up a little bit. So if this whole sector comes down, this whole sector tends to move together, it's very likely, now I'm not saying it is likely for sure, but it's very likely that this might drift lower and underperform as far as relative performance. So this is the reason why I'm investing in Nebius. Not only fundamentally are they very much more diversified in the data center space with Toloka, Avride, 1010, and also the stake in ClickHouse, but they already have a cloud business, right? Applied Digital does not have a cloud business. They build infrastructure for CoreWeave mostly, right? And that's all partnered out through basically channels of CoreWeave. So there's a lot of OpenAI risk there, right? So that's probably the reason why it hasn't recovered dramatically, even though they had a really good quarter. But I mean, who knows? You know, if this, I'm not trying to deter you from being bullish a stock. I'm just giving my thoughts in it, and you know, you can do whatever you like with that one. Of course, do your own due diligence. Do I still have a podcast with Shai? No, I don't have that podcast anymore. I'm doing my show currently, so obviously time is finite. Can't really do everything, but it was great talking to them. Probably gonna have Shai here in the next couple of months to talk his book a little bit in some positions where he sees AI going at some time in the future. Rumor OpenAI mentioned today on their capital raise call they're working with app and monetizing ChatGPT through ads. I would be surprised. I would not be surprised if that's going to happen. So that's a rumor. So let's remember that's a rumor. The stock is still not looking good in this chart, right? So I would not buy in this chart. We're like well below the 200-day moving average. Pretty far extended, but still well below the 200-day moving average. I don't like to buy falling knives, okay? If you look at the weekly chart, we're below the 50 EMA and also the 50-day moving average. This isn't looking so good, and we look like we might be heading, oh, wow, that's a long ways down. I mean, we weren't too far away from there. We're at 359 after those earnings. But yeah, I mean, it's bounced pretty considerably from there, but you're going to have a bounce at some point, right? So we'll see what happens with that one. Yeah, the Qs are pretty weak today. IWM is still outperforming the Qs. IWM is doing extraordinary year to date. In fact, if I go to my year to date performance chart, I brought this up earlier and I posted about it. The EWY is South Korea ETF. Now, this doesn't represent all of South Korea, right? If we go to Seeking Alpha, I'm going to take a look at the holdings over here because I was looking at it earlier and I did post about it. EWY, right? What are the holdings here? It's 26% Samsung and 20% SK Hynix, right? Like, that's crazy. That is how much. That's like half the index. That's half the ETF, right? And Samsung is up like 70% year to date, and SK Hynix is up like 37% year to date. So a 50% weighting and about a 50% aggregated, 50% aggregated return on the year. And meanwhile, well, Hyundai owns part of Boston Dynamics. I think that was Boston Dynamics. Yeah, Boston Dynamics is a robot company, which obviously robotics is very, very much in favor right now. A bunch of banks in South Korea, like obviously this is a 50% technology, 20% industrials, 10% financials. Like this is a very heavy tech weighted ETF, and it's mostly in Samsung and DRAM and memory companies, right? So that's the reason why it's outperforming this year. That is exactly the reason why it's outperforming this year. Oh, wow, 38% year to date. Why does my trading view say 32%? I don't know. It's all good. I mean, 39%, 32%, tomato, right? But that stock market, that ETF is obviously doing well. Energy plays. Let me also share this chart. I want to kind of make it a little bit of a point here, right? So everyone's like, oh, the market's falling off a cliff. The market's falling off a cliff, right? And it's not. The market is not falling off a cliff. It's just what you're invested on is falling off a cliff, which I'm invested in too. So I'm doing no better, right? My portfolio doing that well either so far year to date. And it was doing good, but then the whole market pulled back, and that wasn't really fun to see. But if we look over here, financials are falling off a cliff, right? Financials are down 5.3% year to date. You need to have financials afloat in order to keep a bull market, right? Consumer discretionary is down 2% year to date. Tech is down 3.5% year to date. Communications is down 2% year to date. Now, what is up in the stock market year to date? Well, it's your defensives. Industrials is up 12% year to date. Materials is up 50% year to date. Utilities is up 7% year to date. Energy is up 21% year to date. Real estate is up 7% year to date. Guys, the market is not falling off a cliff right now. Right. The problem is that the market is very heavy weighted tech, right? So the RSP is up 5% year to date, which is the equal weight S&P 500. So every single holding is equal weight. So every single holding is like what, 20 basis points? Let me whip out my calculator here. So yeah, 20 basis points. I don't need to whip out a calculator. So every holding is 20 basis points in the S&P 500 here. So whether it's Nvidia or whether it's some small company or Ali Financial, whatever, there's some small some micro cap or mid cap the S&P 500 is, it is still equal weight, 20 basis points. And basically what this is trying to say is the S&P 493 is outperforming the Max 7. Okay, that's basically what you're seeing here. The Q or the SPY is basically flat year to date. The Qs is down 2% year to date, so obviously tech heavy. So IWM again is up 6% year to date. So basically the X Mag 7 is doing very well year to date. Now, which sectors are not doing well at all? Well, for one thing, the VIX is actually up year to date, which is not good to see. And the VIX is up about 5% today. IGV, software ETF, is down 20% year to date. That's the reason why everyone's getting hammered with software right now, who's buying the dip relentlessly. Bido or Bitcoin is down 25% year to date. Semiconductors is up 12% year to date. So this is why I plant myself mostly in the semiconductor sector, and I need to look for more exposure that are outside of the semiconductor exposure. KWeb is down 9% year to date. So a lot of the Chinese tech stocks are down. So China's not doing too well. And even Apple are all the Mag 7 down year to date? Yeah. Yeah, all the Mag 7 are down year to date. Nvidia's even down year to date. Yeah, they're all down year to date. So, kind of be careful what you buy here. And there's a reason why. Look, if you're weighted in tech and software stocks, you are having pretty bad performances here, right? But you were having great years for the last few years, right? So take it one day at a time and understand that, hey, just because you're having a bad year so far, it doesn't mean you're going to lose everything. Just stay in whatever you think you're convicted in or whatever you have conviction in. And that is what you long, but also kind of have some exposure to other areas. It doesn't just have to be tech, right? The whole market goes up. But otherwise, if you have like a 20 or 30 year time horizon, all of this is noise. All of this is honestly noise with that long on time horizon. All right. So AI is going international. So we had, of course, let's see here. I want to bring this one up. All right. Oh, wow. I missed the post. All right. So I'm going to share this screen over here. Yep. So there was the AI Impact Summit in India yesterday. And we had a lot of big names there. We had the chief of AI for Meta, which is the guy right there. We have Sundar Pichai, which is right here. We had Sam Altman, CEO of OpenAI. We had Dario Amodei, which is standing right here, and a few other people, right? Like, I'm sorry if I don't know what these people's names are, but I'm sure they're pretty important because they're at the AI Summit for India. And, they all got together with Prime Minister Modi, who is, of course, the Prime Minister of India. And they basically made a bunch of deals, made a pact, whatever. What was actually really funny about this was that you had not holding Dario's hand right there, right? These guys are totally at competition pretty much since 2020, ever since Dario left OpenAI with a few other engineers, and they went and started Anthropic. And now Anthropic is a $350 billion company, while OpenAI is going to be about $850 billion. Crazy, right? Crazy. In just a matter of 4 years, you can bring your company $360 billion from scratch. These are very smart people. I am not going to lie. These are very smart people. Not only are they smart, but they know how to manage up the line, right? They know how to bring investments, and they know how to talk their company, and it's doing really well. So they are basically going international as far as the AI investment goes. I want to play a clip from CNBC for you guys regarding the push for international growth opportunities.
Two main rivals in artificial intelligence going viral for a public snub at the India AI Summit. OpenAI's Sam Altman and Anthropic's Dario Amodei refusing to hold hands while on stage with the Prime Minister of India. For today's Tech Check, Kate Rooney has more on OpenAI's global push into India. That was so awkward because they all held their hands up and they didn't touch.
I know. That photo, Sarah, has certainly been making the rounds on social media. But both Anthropic and OpenAI CEOs, as you mentioned, they have been in India making their case for their companies on the global stage this week. Altman, for his side of it, really underlined OpenAI's ambitions and recent growth in that country. Says 100 million people in India now use ChatGPT each week. He added that India there is the fastest growing market for Codex, which is their coding agent. One big question, though, guys, how are they going to monetize some of that international growth? Advertising is one answer. It's been a central point of tension going back to the photo between Anthropic and OpenAI. Anthropic not planning to run ads. They did actually run a Super Bowl commercial, if you remember that, poking fun at OpenAI's decision on advertising. Altman telling CNBC, so far, customers seem to like the strategy.
Anecdotally, the feedback has been pretty positive. I think we still have some work to do to figure out the exact ad format that's going to work the best. But people are like, oh, this is like, a cool thing.
Altman says that they are going to eventually roll out ads internationally, but no timeline there. And if usage does keep growing abroad, OpenAI is going to need to really align revenue with that geography. Ads help them monetize even the most casual users. It does also offset some of the massive data center spending and then shores up revenue at a time when OpenAI is raising what is expected to be a $100 billion funding round, according to sources. Altman also mentioned Instagram ads, a sort of inspiration for what works. Meta, of course, has not had the easiest time rolling out ads internationally with regulatory and data issues. And then we talk a lot about that beef between OpenAI and Anthropic, the competition there. There's also a lot of competition in India's backyard. China is sprinting to also take the lead in AI. They might be more willing to subsidize some of the consumer products. Altman called China's AI progress amazingly fast.
Yeah, so we have the news that broke out last night. Was it last night or was it the night before? I forgot. It was last night, actually. Wow, man, I feel like a lot happens at the stock market that I kind of forget. I literally posted about this yesterday and I forgot about it, or I forgot about when I posted it. But we have here that OpenAI is closing in on finalizing its $100 billion round with major investors from SoftBank, Nvidia, Amazon, and Microsoft. It could put them at an $830 billion valuation. Excuse me, sorry about that. Yeah, so this clearly is not ending. Now, what are my thoughts about this one? Well, I got to be honest, guys, and you might not want to hear this, is that when they IPO, I think it's probably exit liquidity. I would not want to partake in this OpenAI IPO. I also would not want to partake in this SpaceX IPO either, any of these crazy overvalued private markets going public, right? And why? Why don't I want to partake in it? Well, one, everyone and their mother wants to do it, right? So I don't want to be chasing numbers with a bunch of people. But more importantly, look, there's a lot of people who've been invested in this since they were under $10 billion, and they are looking to get out. And the only way they can get out with major liquidity, besides having SPV where they're offering their shares for a company, is the public markets. And that's the best time to go out because that is when things get bid up and excitement and hype really curb up, right? So you have SpaceX, which might even have like a $1.5 trillion plus, maybe more than that if they merge with Tesla. I mean, who knows if that's going to happen? Because then if that happens, I don't even need an IPO. But more importantly, when OpenAI IPOs, like, look, there's going to be a lot of banks that are going to basically back this opening and sell their shares to people on the open market. And through that, after the lockup period ends, then the big dogs will be able to unload their shares. And I will tell you right now, they are going to unload their shares. And trust me, and someone asked this about the Robinhood Ventures earlier, you do not want to be the exit liquidity in this situation. And there's no guarantee it's going to be exit liquidity, but very likely, look, if you made 100 times in your investment and your capital is locked up, you want to take some off the table at some point, right? Or you want to take a lot of it off the table and then rotate those investments to something else. For me, I've thought about it a long time. I had an opportunity to invest in OpenAI when they were like a $500 billion valuation, or yeah, I think it was $500 billion valuation. So yeah, I could have made like a quick like 60%, but I mean, even then, like a lot of people didn't really want to. And I could have invested in Anduril when they were at a $40 billion valuation, would have been cool. But I made more money doing other stuff. So there's really no reason to do that. And plus, all that capital is going to be tied up and locked up where you can't even touch it until the lockout period ends. And even then, I don't know if you guys ever did any private investing. It's not like you can just open up a brokerage account, just take a look at the price every single day. You kind of got to forget about it, right? So you're going to invest that money, you're going to kind of forget about it. That's usually how that game works. So be careful with this, guys. Be careful with trying to chase hype. Chasing hype never ends in a good thing. And I've showed you many charts before. I actually should have not shared that screen when I was just talking right now. But we see what happens when people chase hype. Fig. Remember when they IPO'd? Let me go to the 8-hour chart so we can see how high they were actually when they IPO'd. They were all the way here at 150 bucks. I still remember that because Ahmed bought some of the shares and he was debating if he should sell it or not. And now they're all the way down 82%. Guys, this is not going to come back to 145 bucks, whatever the price is. It will not. I'm sorry. It will not in the current market regime. It might at some point, but it's probably not going to be tomorrow. Okay. So anyone who's super excited about FIG jumping 8% or jumping more like 16% yesterday after hours got their heads ripped off when it dropped and went negative at the open. Yeah, it's up 8% today. But if we take a look at the earnings, they weren't like amazing, right? So let me bring up the FIG earnings for our next segment over here. And I mean, there's a reason why it was up 16%, right? So arguably, they're growing at 40%. So they beat the top line by about $10 million, which is great. They came in line by 8 cents on the EPS. Oh, I don't know why I did a check mark there. Net retention rate is 136%. Operating cash flow at a 13% margin is 30. So they're profitable, right? That's great. That's great. Adjusted free cash flow is about 13% margin. Paid customers paying more than $100,000 ARR is about 1,400, right? So they have a lot of enterprises that are paying them on an annual basis. And they have $1.7 billion in cash. Right now, the company is worth about $13 billion. So that means that about 10% of the market cap's in cash. Hey, that's great. That's great, right? That's great. Fiscal year 2025 ended at $1 billion. Adjusted free cash flow for the year is 23% margin. Great. Non-GAAP operating income is $130 million. Guidance for next quarter is a 38% growth at $317 million. So on a sequential basis, they're going to grow. The whole year guidance growth is going to be 30%. Law of large numbers, you're never going to go straight up. And this is where FIG was at yesterday. You guys like these charts? I love making these charts. They look nice. They look very presentable to people, for people to check out. I love them. I love them. But then now they're like around here, right? So they gave up a lot of those gains. They gave up a lot of those gains when the market opened. And in fact, if I go to the chart here when the market opened, I mean, oh, let me just go to the 1 day. Wow. I want to get rid of this. There we go. Let me go to the 5-day chart. Wow. My man. Come on. All right, here we go. Yeah, this doesn't look good, right? Boom. Sell off in the open. Bought up. Okay. Well, guys, what's your conviction in this thing? All right. So let's say FIG is a buy today, right? Let's say FIG is a buy today. Let's look at their valuation. I'm going to do this real quick and I'm going to run through the other ones. Whoops, that's FIG's. I wanted to have Tevis on here to talk about the Lemonade earnings. But unfortunately, my man has a full-time job. Hey, I got a full-time job too, but I'm on my lunch hour, so I'm good to go. All right, so we have over here that they don't even have a PE because they recently became. Are they even profitable? Is this even updated? Let's see here. Quarterly. This is updated. Holy cow. They are not even profitable, are they? Nope, they are not profitable. They are not profitable. So this is the adjusted metric. This isn't even GAAP that I posted yesterday. My bad, my bad. Trust but verify. Yeah, so they're not even profitable. They're growing at 48%. They're going to grow at 30% next year. They're not even profitable. They do have a high gross margin, but that's because they're a software company. So, of course, they have low overhead. They scale out at a cheaper cost the bigger they get. That's the purpose of that. I don't know, guys. I don't know what you're trying to buy this business for. I mean, you have high hopes, but I would even say even on today's valuation, they're trading at 10 times forward price to sales. Like, already an expensive company, and they're up 8% today. Are you shooting for a 20 times price to sales to make a double? There's much better stocks in the stock market to buy this one. That's just my thesis with that one. All right, let's move on. Let's take a look at Lemonade. Let's take a look at Lemonade. I'm just going to bring this up over here. So Lemonade update is less about hype and more about tightening underwriting, right? So Lemonade is more, they actually have a trifecta here, right? And I don't own Lemonade anymore. I could be bullish a company and not own it, right? You don't have to be like, I'm bullish SP 500, but I don't own the SP 500. I own specific stocks. So Lemonade is basically an insurance disruptor, right? You have all these legacy companies like Geico, Allstate, and Freeway, and all these local insurance companies. And Lemonade's coming in here and they're offering like basically a platform service for all of your insurance needs. And they're expanding into housing and everything at some point, not right now, or maybe in certain states they do. But their biggest prime deal is auto, right? They acquired Metromile back in like 2022, 2021 or something like that. And since then, Metromile, of course, went into Lemonade. And now they're basically growing their business, right? So Metromile was more of a pay-per-mile team, also had AI, but Lemonade had basically boosted that initiative. Honestly, these numbers are really good. Like the in-force premium, this is the annualized run rate of the current contracts that they have on an annual basis. And we see here that they keep growing, right? In-force premium keeps growing. That's what you want to see on an insurance company, especially. Gross loss ratio. So after you take out all the costs they pay to insure all these people and all the risk and whatever, you want to see this number lower, right? So the lower the gross loss ratio is, the lower the amount of money they lose on a gross basis for all their policies, right? Actually, don't quote me on that one. I got to look up what that definition is again because I haven't done more research. I got to continue to do a little bit more research on Lemonade. Actually, not really because I don't own it anymore, but you want to see this number go down. And it's been going down. It's been going down. In fact, this is around the time when it bottomed. When they had I think they were in like they were in the teens range as far as their, as far as where their stock was trading, right? And this number keeps going down. The company just keeps getting better. But not only that, they're tightening their belt as far as all their expenses goes by using AI, right? So they're able to have less overhead. They're able to run estimates on policy insurances for a lot of potential customers very quickly because they're using AI. They're able to make those comparisons to offer a competitive rate in the real time in the market. It's good. Like the same thing as Root, right? Root is also an AI disruptor as well for the insurance market. The question is, why did the company sell off after earnings? So let me go to that real quick. If I look at Lemonade over here, yeah, I mean, they were up a lot pre-market. In fact, if I go to, if I go to yesterday's close over here, no, that's an 8 hour. Okay, so maybe that's what I want, right? They were up as much as 10% in the pre-market. And then now today they're down like 11% from yesterday's close. No, that's not right. I think that's after it. Let me do the 4 hour. Okay. Yeah, this is where they closed. Right here. Okay. And then you're up like 13% pre-market in like the $74 range. And then now they're down like 6.8%, right? So the market, guys, I still remain bullish in the stock market, okay? Because the market is literally built to go up. But on the short term, guys, I don't see a reason to like go all out short the market and sell everything. In fact, I don't think I'd ever be in that position to do that. But guys, they are selling off companies with really good earnings at the open, right? What happens after hours? Low volume. You get a lot of people being able to bid up stuff and prop up the price of a stock. Hedge funds and usually fund managers, they usually trade around those positions. Trade desks usually do it too. Not the trade desk, but trade desks in general usually do it. They usually bid up a stock. And then they sell it when the market opens into liquidity. The people who are buying and chasing Lemonade as soon as the market opens is their exit liquidity. So did you buy Lemonade this morning? I hope not. I hope you were not chasing Lemonade this morning. When I saw the stock up that much this morning, the first thing I thought was, this is probably going to get sold off, right? Because yes, they had a great earnings report, but in this environment, FIG sells off at open, right? In this environment, you had Carvana down about 24% as soon as they had their earnings. The scare was, that's actually kind of a bad example, to be completely honest, because I don't know. I have no opinions about that one, but I would never buy Carvana. I would honestly never buy Carvana. There are a few other companies that sold on really good earnings. Amazon sold off on good earnings, right? Remember that day? That was actually the night the market bottomed. So we'll see what happens with that one. But remember when that happened? That was brutal. That was brutal for me. That's for sure. That was when a lot of my performance went out the window that day, unfortunately. You've had a lot of good companies that reported good earnings sell off. And it didn't sell off because of the numbers. It didn't sell off because of the guides or anything. It sold off because of the CapEx fears. Oh, I was not sharing the Amazon chart when I just did that just now. Yeah, so this is the Amazon chart that I was showing. Sold off after earnings. Meta sold off after the earnings, not immediately the next day, but it's sold off. And we're trading below than where we were before earnings. And those earnings were amazing. And look where it's trading at now. Crazy, 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 crazy how much these things sell off after the earnings end. So yeah, even Robinhood sold off, and those are really good earnings, right? Like this is not the stock market where you want to be like gambling and stuff. This is the stock market where you wait and see what's going to happen. I don't even know what's going to happen with Zeta, to be honest. They report earnings on Tuesday after close. My guess, probably the same thing, pump and dump, you know, and they're probably going to have good earnings. They're probably going to be profitable, but the market, just as of the moment right now, it just does not like software. It doesn't like software one bit. NVIDIA was earning on Wednesday. Guys, remember last quarter? NVIDIA had amazing earnings, blew everyone's mind, sold everything off the next day. I don't know if that's going to happen again, but that was a dramatic sell-off. That was literally institutional unwinding when that happened. So those are my thoughts around that one. Carvana, I don't really talk too much about it, but really the story of Carvana was that the market doesn't believe them in terms of their accounting. And even if they have a really good guide, they just don't believe them, right? So the sentiment is really going to weigh down in the stock more than how bullish the fundamentals actually are, right? You have Nvidia literally trading at a 20 times forward PE, okay? Cheap company. Well, cheaper compared to its previous valuation. And it's getting sold off. Why isn't the stock $250? Because of those reasons. It's the sentiment. The market doesn't believe this CapEx story. They don't believe that all these companies are going to spend all this money and return a profit. They don't believe that OpenAI is going to be able to return a profit ever. They don't believe that Anthropic is going to be changing the entire world, or maybe they do. Maybe that's bringing the software scare. But I'll tell you right now that they don't believe that all this CapEx being spent is going to return anything. And that's kind of what you're seeing. Can Nvidia save the market next week? Well, we thought it was going to save the market before, and it certainly didn't. It certainly did. You know what's saving the market right now? Energy is saving the market. Utilities is saving the market. Real estate is saving the market. Materials is saving the market. Industrials is saving the market. Staples is saving the market. You know what's not saving the market right now? Financials, consumer discretionary, tech, communications. Tech is not saving the market right now. Tech is dragging down the market. So be careful, guys. Be careful out there. And that is it for today's show. Go ahead and tune into the Wolf Financial YouTube channel, where you can go ahead and check out a lot of additional videos, a lot of additional content. Actually, Gab Blacksburg did interview Tickle Symbol U. I don't know what that guy's name is, but he's very popular. He was an early investor in Nvidia, I think in the teens, in the 2010s. Continues to be bullish Nvidia. Also interviewed Peter Schiff and a few other people. Go ahead and check that out. There's lots of great content on there. This is also streaming on there as well. It's also streaming on my channel as well, so you can go ahead and stay on my channel if you'd like to. But for everyone who's on the Wolf channel, thank you very much. Go there and subscribe and like to the video, guys. Really appreciate you tuning in. Peace.